Alright, hi everyone. So today we're going to be recording the first of many technical analysis videos, and I thought a good introduction would be to look at candlesticks, what they mean, what they are, how you can use them to understand what's happening. This is my first one, so I might redo it in the future, depending on feedback, so please let me know in the comments if there's anything I haven't covered that you'd like covered, and I can incorporate it into a V2 if needed. So I think initially we'll cover kind of the candle makeup, so looking at the high, the low, the open and the close, the candle makeup, the candle types, and the time frames and how that can impact kind of candle makeup. So, the basics. So the candle is made up of 4 components, and that is a high, which is the highest point that the price reached within that candle period. You've got the low, which is the lowest price that was reached within that candle period, and then you've got the open, which is the price that the candle opened at, and the close, which is the price that the candle closed at. All very self-explanatory. In terms of how it's made up, so it's essentially made up of 3 things. You've got the body and the wick. I think it's also known as a shadow. And essentially, what you will see is the high is the top end of the wick. That's the highest point, even though it didn't close there. The low is the lowest point, and then you've got the open and the close. So a bullish upward candle is where the price has opened, maybe it's gone lower, but ultimately it is closed higher than when it opened. That would signify a bullish upward candle, and would generally close green or any other colour if you've chosen a different colour, but the default is green. And then you've got the bearish or the downward candle, which is where the price has opened at point A. Maybe it's gone higher, but it's retraced down and it has closed lower than where it opened. Okay, and we'll look at some real life examples of these in a minute. Actually, let's do that now. So let me just come out of here. Hopefully, great. Okay, so we can see lots of examples here, right? Let's go up to the daily. It might be a little bit easier. Let me get rid of everything here. Cool. Okay, so we can see within. We're actually. I might skip into time frames here. So a candle, it represents all of the action that has taken place within that candle, and I'll represent this in a hopefully an easier way now. So from a candle perspective, if we kind of zoom in. Actually, let's go to this last one. This is quite a good one. So for me, this candle here, it's obviously a bearish candle. It opened here. That's the open. It came up to here. It then came back down to this point here. And then it closed here. Okay, so that was the action. So open, up, all the way down, and then some retracement back up, but it closed its day in the negative. And that happened the day before as well. This is more of a sort of what I would call a doji candle, but it's still bearish actually. In fact, it's not a doji candle at all. It's still got a little bit of volume in there, just not as much as the day before. So, but again, opened here, came up here, came all the way down. Oh, that works. Came all the way down here, and then stopped and closed lower. Okay, so those are a couple of examples. When you're looking at the daily, you can generally expect a bit of reaction. So let's say if you're looking at the previous candle, you have your low here. Okay, so this is where the previous day closed. Some people, I don't do this that often, I think maybe it's something I look out for subconsciously, but you'll have these levels marked in and you'll generally expect some kind of volatility when price passes through the previous day's low, or if it reaches all the way up to the high of the previous day. You know, you could expect some volatility there as well, because there'll be lots of resistance at that level. Resistance is something that we'll touch on in a separate video. And while I'm here, I'm going to skip into time frame. So I'm just going to highlight this one candle here. This isn't working very well because fine. So we've got this one candle here. This, we're looking at the daily time frame. So you can select any number of whether you want to look at it on a daily or a weekly time frame or an hourly time frame. The lower down you go, the more volatility you'll see on the charts. So, but here we've highlighted our day. So this candle represents all of the action. Sorry, I keep looking over there because I've got another camera over there, it's not turned on. So that one candle represents all of the action that's happened within the last 24 hours. Okay, and if we go down into, let's say, the hourly, you'll see where this box is highlighted. Okay, so this is, it's actually slightly over because my box was slightly off, but it's here essentially. So these are all of the other candles that existed within inside that daily candle. So you can see it went up, it came back down, it came up again, and ultimately closed down. So that action we were talking about, where we were saying it opened here, it came up to here, it rejected all the way down to here, and then it came back up and eventually closed here. Okay, you can see that as we showed earlier on this one candle here. And so again, oh, that's 2 hours, sorry. If we go to the hourly, you can then look down even further. So you could say, okay, well, what happened on the, let's go the 5 minute chart. A lot of stuff happened on the 5 minute chart. So now you've got way more candles, okay? So it's all fractal, it all comes down. So this is what I can see on the 5 minute. So in that day, there were a load of hourly candles, and within those hourly candles, there are a load of 5 minute candles. So if we go to this hour, just to represent this one last time, I'm going to highlight this, let's say the last 2 hours of candles. You're going to see that there's a load of action that happens in here. And you get a lot of people who, or any trader, will trade on different time frames, high time frames, low time frames, and there's opportunities on various time frames. So on the higher time frames, you'll get maybe less opportunities, but less volatility, because you'll be buying at a higher level. The price won't be zigzagging around constantly while you're in a trade. Whereas if you're on the 5 minute time frame, you know, you could see here, you could potentially enter long here. If you were good enough, or not good enough, if you were lucky enough, you could enter a short here, and you could take, whereas on a daily time frame, you might just, you know, you might enter, you know, a short here, and you wouldn't care about all the zigzagging that happens within each one of these candles. You would just let it run down. Different mindsets are needed for the different types of trading that you're doing, and again, we'll dive into those in separate videos. I think that's everything I can think of from a candle perspective. But if there's anything I've missed or you're interested in or want to know more about, let me know in the comments, and I'll update the video, or do a different video to cover the stuff that you're interested in. Okay, so I think we've covered kind of what a candle looks like, the different time frames, which I'll go back up to the previous slide in a minute. So the higher the time frame, the more significance the candle close holds. We didn't actually touch on that. I will go back to that in a second. I would always say wait for the candle to close. You know, sometimes you'll be on the 5 minute time frame or the hour time frame, and you'll see the candle kind of spike down, and you might think, oh my god, it's going lower, and you sell, and then it will come back up and it will actually close higher. So actually what that candle's telling you is that it's still in a bullish kind of formation, but what you've seen is a very temporary pullback. So I think it's important to wait for the candle to close before either deciding to jump into a trade, depending on your strategy. I don't always do that. In fact, I find it can be quite profitable not to do that, but that's me. I've got a lot of experience with that, and I've experienced a hell of a lot of losses trying to figure out when the right time to get into a trade is. But yeah, so generally wait for the candle to close to get a clear direction. A candle that's halfway through forming can generally lead to mixed signals and losses and a bit of pain and frustration. And watch out for lower time frame noise. This is really important. So when you are on the daily time frame, you can see the trend really clearly, right? So if we think about the significance of this candle, or not even this one, this is the end of the week, but this one here, it engulfed the previous green candle, so the previous up candle, so the sellers have taken control here. So with a green candle, what we call the bulls are in control, the buyers, so the buyers are pushing the price up, okay, and people are selling, like we saw in the 5 minute candles, but the buyers have won the war, essentially, for that particular candle period. And when it's red and it closes lower, the bears have won. The sellers have managed to push the price down. So every candle really is a representation of a battle between buyers and sellers. And what's happened here is interesting. We've had the buyers kind of push up the price the day before, but the next day the sellers have come in and wiped out all of the gains that were made here and have pushed it lower. We'll talk about patterns and candle types in a second, but generally that's a sign that things may continue to go down. And we can see that, right? Obviously it's very easy looking back at previous charts, it's easy to read stuff that's already happened. But you can see that. So on a higher time frame, if it, you know, you could say, oh, it's closed red, it potentially will keep going down the following day. You know, these reversals, you don't just get, or you very rarely get a big green and then a big red taking it over, unless there's been some kind of major announcement or volatility. You'll generally see the action on the red will, you'll see these rejection wicks coming up, then maybe a buyer will win, and then maybe it will continue. We'll talk more about that shortly, or you'll get these periods of kind of consolidation maybe, that will show that price is stagnating and maybe things are changing. In this scenario it didn't, it just consolidated and then decided to carry on. So yeah, and I think the other thing is, going back to the daily time frames are more significant. If we go down to the 5 minute time frames, the one that we were looking at earlier, you can see that a green candle closing up, held significance for a couple of candles, or 4 candles. Then we had a big red one, but actually it got swallowed up and carried on going. Then you have this big green candle here, and then red, red, green, red, 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 red. So things, they move in the same way on the daily, because it's a fractal chart, so everything looks the same. You can't really tell the difference visually from looking at the 5 minute to the daily. But because the speed of which the chart is being generated will show a lot of ups and downs, ups and downs, ups and downs, and it will move very quickly. You can get in and out of trades quite quick, and you can get wrecked quite quickly. You can get a lot of noise down here. So if you're, let's say that I'm looking at the 5 minute chart and I just happen to have this section up, right? I might see this big green candle here, just around, I don't know if you can see my mouse, hang on. I don't know if you can see my, okay, here we go. So let's say you see this and you might go, wow, what a great candle. That's definitely going up. But then when you go up to the next level, it suddenly looks bullish, right? Massive green candle, that's awesome. But when you go back to the 30-minute time frame, or I can't even see the thing on the 30-minute, there you go. You actually can see, oh, actually that was just a small spike up on the lower time frame and it's gone straight back down again. So I think one of the things to be careful of when you're in the, if you ever find yourself in the 5-minute or the minute time frame, is not to get lost in the noise. It's very easy to see a rally on the 5-minute time frame and price going up, 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 and you go, oh my god, kind of mania sets in. You know, and we'll talk about mindset and how to avoid that in future. And you start going long, and then it hits, you know, some resistance at a higher time frame and just crashes straight down, and you'll get wrecked instantly. So it's something to be aware of. I will talk about it in a future video. Okay, cool. And then I think the last thing that I wanted to touch on from a candlestick perspective is candle type. So there are loads of different candle patterns or types that you can look at, but my three favourite ones are the reversal hammer and the shooting star, the engulfing candle, which I mentioned when we were looking at the charts, and the doji. It's worth saying, don't blindly jump if you see these patterns. They should be considered in confluence with a higher time frame, because it's the higher time frames that really set the trend. But they can provide you a signal or a hint as to what, you know, may happen on the next candle. My personal favourite pattern, which is really a consolidation of, or a conglomeration of lots of different candles together, is a head and shoulders pattern. It's quite cliche, everyone says they love the head and shoulders pattern, but it can be a really powerful indicator. And again, I might touch on this in a minute, but I'm conscious of time. So let's look at a couple of candle types just to round this off, and I think I will keep the head and shoulders as a separate video. So reversal hammer and shooting star haven't. So you could argue that this on the 30-minute is a shooting star. This one right here. Okay. So, and a shooting star is basically where the price has gone up, which you can see here. It opened low, so it opened here. Let me just highlight that. It opened here. It came all the way up to this top, and then the sellers pushed it kind of over halfway down. You end up with kind of this, a bunch of you can just see some rejection of the wick. It didn't keep going up, it got rejected and pushed back down. Now on its own, that doesn't mean much. However, if you take into account that the higher time frame is very much in a downward structure, you could argue actually this would be a signal to go short, and it would have worked, because you can see straight away the downward trend continues. So this was just a small rally up on a smaller time frame as part of a much bigger picture, which then pushed the price back down, and the bears took control again, and pushed the price down lower. You can also see, in fact this is actually a great example, I'm going to cover them all off at once, that we've got this engulfing candle here as well. So an engulfing candle is where you've had a move up, but then the next candle that follows wipes out the previous candle, maybe 2 candles, maybe 3 candles or more. That's also usually a sign that there's some kind of reversal happening, that the upward movement you're seeing on this time frame could potentially be coming to an end. Now, in this scenario, we're following the trend, so it's pretty obvious, However, they also mean more on higher time frames. So you can see here, we had this push up on the daily, so there's a lot more significance on the daily. We had this big engulfing pattern here. So let's say if you were really lucky or really skilled or whatever, you could have caught this entire move. But even if you didn't, considering the rest of the chart is down, you could argue that it's likely to continue going lower because it holds maybe a bit more significance on the daily. and therefore you could look for entry and continue to go short or continue to sell the market down. So yeah, another example. And the doji, you generally don't see a lot of dojis on the higher market, on the higher time frames, but here we go, perfect. Okay, so doji generally represents, it's called doji because it looks like a doji plus sign. It basically says that there's indecision in the market. So buyers have come in, they've stepped in, the following day no one's really won. So it opened here or underneath, it came up, it went back down, it went back up again. The buyers and the sellers having this war have basically come to a tie and no one's winning. So it's a mark of indecision. And there are two ways that I use the doji, either to tell me that I need to stay out and that maybe direction is changing, or I'll use it as a place to get out of the market. So if I was in a short here and I'd gone, well, let's say for whatever reason I hadn't sold on this doji here, that's actually a good example, right? I'm short here, comes down again. The next day there's hardly, the bears win, but they don't win by much, right? It's pretty, I would class that as a doji. There's indecision in the market. I would use that as a sell. So the second I saw this forming, I would be looking to get out. Let's say it gets to the end of the day, it's 10 o'clock and the price is sitting here, volume's died off. That would probably be my selling point. Maybe not 10 o'clock, maybe 9 o'clock. So yeah, and same here. Let's say you've caught this upward trend. You've found some resistance or whatever, support, sorry, and it's bounced back up. You see this doji the next day, you might use it as a way to get out. So yeah, doji is a sign of indecision. That's how I use it. Doesn't mean that's how you use it. You'll have to figure out your own kind of strategies and how to use candles as you go along the way. But yeah, so that's the introduction to candles. I hope you found it useful. If not, again, please let me know in the comments. I'm really trying to add value and kind of share my understanding of the technicals and how the charts kind of fit together. So yeah, keen to cover or improve in any way that you guys can tell me I need to. Thank you very much. Hope you have a nice evening and I'll catch you in the next video. Bye bye.